Welcome, welcome. Thank you everybody for joining. We'll start in about a minute. Let everybody trickle in from the waiting room. Great, looks like we have people coming in, so we'll go ahead and get started. Thank you everybody for joining us. My name is Samer Yusuf. I am Chief of Staff at BLCK VC. We have an incredible event for y'all today. I'm really excited to introduce the speakers that are going to be coming on. This forum on board service on venture-backed companies is obviously very important to the mission of BLCK VC, but also several of our partners within the work that we do. So we're joined today by the African American Directors Forum, Gunderson, Dettmer, and Spencer Stuart, who've helped us to pull together this great event for y'all and these great panelists. So at a high level, I'm just going to quickly walk through the agenda, then I'll hand it over to our great moderator, Maria. But we'll start off today's session with a panel with speakers from across the venture and private investment ecosystem. And then we'll transition over to a fireside chat with Marlon Nichols and Sydney Sykes. So in the meantime, please use the Q&A feature and the chat box to introduce yourselves. Any questions that you want to have, feel free to drop them in the Q&A comments in the chat so we make sure that we get to any questions you have. And with that, I want to go ahead and transfer it over to Maria Velissaris. She's a founding partner of Steel Sky Ventures.
Thank you. Excited to be here with everyone today. We have a really amazing, esteemed panel today, and I'm just going to jump right in. We don't have much time, but there's so much great information to get out of these guests. So you guys just don't know how lucky you are to be able to hear from some of the best in the industry. So we will have Priti kick us off with introductions.
Hi, everyone. My name is Priti Choksi. I'm a partner at Norwest. For context, Norwest is a 60-plus-year-old firm. We are multi-stage, which means we invest everywhere from seed to late-stage venture rounds, anywhere from a 250,000 seed check to 50 or 75 million lead check for later rounds. I sit officially in the consumer team, but color outside the lines quite a bit. And spent my entire career in an operational role and operational roles across early Google and Facebook before I got to Norwest about 3 years ago and transitioned to the dark side of venture.
Great. Mercedes?
Hello, everyone. My name is Mercedes Bent, and I'm a partner at Lightspeed Venture Partners. We are a firm based out of Silicon Valley that's investing in early and growth stage businesses. We do investments in 7 regions around the world, and we're investing out of about 10 billion right now across all our geos. I personally invest in consumer, fintech, and ed tech. And prior to this, for the last 12 years, I spent half my career as an operator and half in finance. So excited to speak with you all a little more today.
David.
Thank you. A quick shout out to BLCK VC for hosting this event and for the invaluable role that they're playing in creating a homeroom for Blacks in the VC world. I'm very happy to introduce to you Black Tech Nation Ventures, a $50 million Pittsburgh-based majority Black-owned venture fund. We launched this year and are well positioned for our $25 million first close at the end of June. We'll begin building our portfolio immediately thereafter, writing checks ranging from $250,000 to $2 million. Our portfolio will comprise companies, founding and executive teams with significant Black and diverse representation with respect to stage and sector. We are an early and seed stage investor focusing on software, SaaS, and enterprise technology oriented companies.
And Julian.
Hi, everyone. Julian Harris. I'm a partner on the healthcare services and technology team at Deerfield, which is a New York-based diversified healthcare services firm. We invest across all facets of healthcare, from life sciences to devices and diagnostics, in addition to the healthcare services and tech team where I work. We also invest across stages from very early stage seed and Series A and company formation through later stage growth equity, crossover rounds, and public investing as well. And delighted to be here.
Great. Excited to have all the panelists, and I'll just introduce myself, Maria Velissaris, founding partner of Steel Sky Ventures. We're a women's health fund that invests in companies that create better access, care, or outcomes in women's healthcare. We invest, our average check size is about $1 to $2 million, and really excited to thank Mercedes for our last deal, which is really fun and amazing. So thank you again, Mercedes, for that. So let's jump right in to learning more about what makes an impactful board member. So everyone here has experiences on board, and we've all seen the good, the bad, and the very ugly. I would love to hear some of the characteristics that make a board great versus some of the aspects that may make the board not so great. Anecdotes are preferred, and actual company names can be omitted. Who wants to kick us off? Okay, David.
I love that phrase on the good, the bad, and the ugly. My career in venture started in a corporate venture fund and has migrated now to this being my second private venture fund. And I would say that the good, the bad, and the ugly come on both sides of the table. They come with respect to the portfolio companies that you can invest in. Everybody knows that the funnel that we're trying to manage typically has about 10 times more companies coming into the funnel than are coming out of the funnel at the bottom towards successful exits. So that journey from top of funnel to bottom of funnel can be quite painful. On the other side of the table, there's also something to be navigated with respect to managing through your investors. And you'll find that when things are going really, really well, all investors, I think, are created equal. But in times of challenge, when you have to really look deep and apply significant judgment and reason, you'll find that you'll have a hierarchy of investors, and the best investors are making wise decisions, tough decisions when they need to, but they're applying all of that knowledge and wisdom, that pattern recognition, to being able to help you navigate through the challenging times with companies that still have the potential to be successful, even though they might be going through some rough sailing.
Priti, Julian, Mercedes, do you want to jump in?
Yeah, I mean, I think coming into any board, sort of my rule of thumb is first, do no harm, right? There is a reason the founder has built his or her company, and there's a mission, and there's a product, and there's a team around bringing an idea to fruition. And you know, it's hard in certain situations. So you could talk about, I'll talk about when things get ugly, just picking up from when, you know, what David was saying, because that's when you really see what your board is made of and how you can be most helpful or hurtful. I inherited a board seat into a particular company that we had invested in about 10 years ago. It had its heyday and was on a decline quite steadily. After 2 board meetings, again, fresh new board member into the company, I realized it was like we were practicing the very definition of insanity, where we were expecting to do the same exact thing, but expect a different outcome. And as the largest shareholder in the company, had to make a pretty tough decision, which was to replace the CEO and do a massive reduction in the number of employees we had to give the company a chance to even exist. The short version is we removed the CEO, we brought back the founding team to lead the company, and we laid off half the company. And, you know, that as a new board member is just a hard thing to take on. And when you don't have a relationship with the founder or with the CEO or with the other board members. And so it's a tricky thing to navigate, and, you know, it takes a lot of one-on-one conversations and then practical advice. So for example, 2 days before we were about to announce the reduction in force, the old new CEO called me and said, Priti, I've never done this before. Who can I speak with in your portfolio that can help me? And at that point in time, I was like, wait a second, I got your back. I did M&A at Facebook for a number of years, and we've had to manage through this. So let me give you a guideline on how to walk through it. And, you know, that couple of hours that we spent sort of coming up with a work plan and delivering it made all the difference in sort of how we manage the emotions of the company and the departing employees. But I'll end there just on, as an example of things that are tough to do but need to get done, and just the consensus building you have to get through and the tactical things you need to think through in order to bring them to fruition.
And Julian, you've been on numerous boards. I know you have some good stories for us.
I've been really fortunate. Board dynamics vary. My perspective on boards, serving on boards, and kind of the approach that I take personally has been informed from having been an operator and having an enormous amount of respect for the CEOs and the management teams, and trying to be thoughtful for how we use their time and making sure that we're using their time in ways that are value added. Of course, you hope the reverse is true and that the management teams are using the board's time well. But I think at best, there really is, an enormous amount of opportunity for constructive engagement. Although I will also say that a lot of the ways that I think board members can be helpful happen outside of the boardroom and not in those board meetings, and that those sort of ways include being a thought partner for the CEO, not just on the question that's on the board meeting deck, but for medium-sized strategic questions that come up much more frequently, helping them both source and vet and select talent, helping them with navigating kind of the path to partnerships or contracts are some of those things that are relevant, at least on the tech-enabled services side, helping them think about partnership opportunities with other companies, and then helping them think about sort of financing strategy. And some of those things, again, are things that may happen in a micro way in a board meeting, but the substantive engagement around a lot of those things often happen outside of the board meeting, and those are the things that I probably spend more time on with our portfolio CEO. So, but holistically, I've been fortunate to have really great co-investors. It is interesting, to kind of think about how board dynamics change when new members are added to the board. It's a small group almost always, and so adding a new member changes the chemistry of the board. In certain cases, people come off boards, as additional rounds happen, and so that's one of the things I think is kind of really interesting to reflect on. But in broad strokes, it's been, there've been hard decisions and hard calls to make, and some leadership transitions and those things to navigate. But holistically, the boards themselves, I think, have been good experiences.
I love what Priti said in terms of, do no harm as a board member. I think if you go and look, if you've read the Circle Up CEO's expose about kind of one of his terrible board members, I guess not expose because he didn't name it. That to me was just a great article of what not to do as a board member and how wrong things could go. When you read it, some of it is quite obvious, but at the same time, I think it's good for anybody who's going to be on a board to just read and think about how some of the things you say, you may not intend for them to be harmful, but they can be quite destructive and being distracting and really just taking away the CEO's time and mind share. I like to, think of in early stage, investing. What I'm doing, I always tell my CEOs I work with, look, I'm not your boss. There are some situations where on the board, maybe I could have some power to remove you if I got enough people to agree, but really I'm here to be a coach. And so don't look at me as a boss who you have to answer to. I think when board members have that idea in mind that they're the boss, that's where things can start to go wrong.
Really good advice. Mercedes, would you mind putting that book in the chat? It sounds really great, and it sounds like it could be a wonderful resource for everyone on the call. And I know my first board experience was at a nonprofit board, and now I'm a VC. I'm on the board of a lot of VC-backed companies, and the experiences are very, very different. So I'd love to hear from our panelists. What are the similarities and differences between being on, maybe if you've been on a nonprofit board versus a VC-backed board versus a public company board? Mercedes, do you want to start us off this time?
Sure. I think on an early stage board, one of the things I mentioned we're minority investors. We're not majority investors, so we don't control the company. We think about influencing through being coaches and through persuasion, not through, ruling with a quote unquote iron fist. And so that's a bit, different from maybe some majority owner investors. I'd say another thing too is at the early stages, I'm often investing in companies that are at the seed stage, the Series A, the Series B. And a lot of times we aren't sticking to what I think people think is a normal board schedule. Normally people think of boards as happening once a quarter. Maybe board members are compensated. That stuff doesn't happen at the early stage. We meet very frequently, sometimes every 2 weeks. Sometimes we meet every month. Sometimes we meet every 6 weeks. We set up a cadence of whatever the founder wants to do. And of course, in addition to that, you're talking to the CEOs all the time. So that's one really big difference. And I would say also, the boards are small. A lot of times I'll start working with a company at the seed stage and maybe there is no board, but the first board size might be 3 people, 1 investor and two co-founders. And so normally when we start out the boards, the investor is in the minority and the founders have control. And then later on, maybe the Series A or B, a lot of times the boards don't start until Series A, but the Series A or B, it might get up to 5 people or 6, but they still are fairly small. And most of the people on the board are either investors who have a large percentage stake in the company, or they're the founders. The idea of independent board members doesn't typically come into play until quite a bit later. Maybe around Series C, you might have an independent board member, but it might just be 1 of 6 or 7.
Yeah, I'd add to what Mercedes says, which is I served on the board of a contemporary dance company for 10 years. And we had 30 plus board members. And on a nonprofit board, you're really a fundraiser at the end of the day for most institutions. And you are less involved in corporate governance. You're probably thinking about succession planning with a nonprofit board. You're probably thinking about fundraising. You're trying to think about the big targets and sort of what you need to do to really light up your network to bring other individuals into the fold, which is very, very different than private company boards. As Mercedes said, a lot of it is setting up the governance for the company, and figuring out what's the cadence, what are the strategic priorities that we should focus on, and really thinking about each board member and what their superpower is relative to the group, right? Because each of us come with a certain perspective and we can be helpful in specific ways. And, a good CEO also knows how to leverage his or her board really well by tapping into those specific expertise to be that sounding board for them and, be that sort of multi-headed coach for the founder or CEO.
David, did you want to share?
Absolutely. There are a lot of great points by Priti and Mercedes. And I think that there are a couple of similarities between, let's say, public company boards and venture-backed companies, but a much longer list of differences. And the similarities are, people talked about the concept of do no harm. Another way to look at the other side of that coin is that the role of the board is to help the company and the ownership team of the company be successful. And you do that by being knowledgeable, being available, and being well connected. That almost completely captures the similarities. There's a long list of differences, and some of the things that I like to talk about when I talk about being in the VC world versus being in the public company world. Mercedes was sharing the predictability and the cadence of the board members. Typically, I happen to serve on both public company boards as well as VC-backed company boards. On a public company board, you're going to find your schedule almost a calendar year in advance. And some of the boards I serve, we have our calendars out 2 years ahead of time. By contrast, on a VC-backed company board, you're basically responding to the needs and challenges of that company, and it can be weekly, monthly, or daily if you're in a continuity of employment type situation for the company. Another thing that I would say is that Mercedes shared that in the earliest of stages, and it may just be the founder and 1 or 2 other people, but eventually you typically get to a point with a VC-backed company board that You have the founder, and then you have a board that is heavily oriented towards people that have significant stakes in the company. So the number of insiders on the board in a VC-backed company is usually substantial by the time it has meaningful capital deployed in the company. That creates a really interesting dynamic with respect to the perspectives of the people around the table, making decisions that both reflect the best interest of the company, which obviously their board director role suggests they should, but obviously they also have that duality of representing their fund. And because over time you end up with the possibility of investors who came in at different stages and share classes and different types of preferences on their ownership, you can end up with some pretty complicated circumstances in terms of conversations that have to be navigated in the boardroom. And then the other thing that I would say is that the role between management and the board becomes quite blurred in a VC-backed company. In a public company, it's a bright line. You very rarely cross it, if ever. In a VC-backed company, the idea that management is focused on operations and the board is focused on oversight changes quite quickly, both in opportunity and in challenge, where the board can step in and absolutely be playing a role, all the way down to, I've seen circumstances where if there's a major opening on a leadership team in a VC company, board members actually can step in and fill those roles on an interim basis. That's how blurry it can be. And then I'll just leave you with one more thing that I think is patently true. Public companies live in human years. Annual plans, annual thinking around a lot of aspects of driving that company forward. Performance metrics, performance evaluations for the team. VC-backed companies live in dog years. They're living in at least 5, 6, 7 iterations on a plan over the course of the calendar year, much more tied towards the runway that they have with respect to capital and their progress and achievements against milestones. And so that whole cadence is just completely turned on its head when you move from a public company to a private company.
That's really interesting. I wanted to elevate something that Mercedes said. She mentioned compensation. So compensation can vary greatly depending on the type of board and the model that they have. Julian, do you want to kick us off talking a little bit about different compensation models that you've seen?
For board service?
Yeah, for board service. Because I know on a VC board, I'm not compensated. It's just a part of the role of being a VC, but I know some people can, get carry some. So there's a lot of different ways. So just curious to see what types of boards you've been on, all of the panelists, and how that may differ from a compensation perspective.
Yes, I think in general, for folks who are at investment firms, serving on the boards is just part of the job, and you generally have the kind of economics associated with being a member of the investment team at the firm. But for people who are independent board members, it can vary pretty dramatically. In certain cases, there's sort of ranges for companies at different stages, and in general, you either have existing internal benchmarks that you're leveraging, or if there's a question, you might work with a firm to get access to benchmarking data for a company at that kind of size and stage, and then you have sort of a range that you're working with, and then where any individual board candidate might sit within that range is kind of tied to their status in the field and their expertise and what they might bring to bear. So I'd say it's variable. In certain cases, you're adding a board member because they have certain domain expertise that's relevant to the work that the company does. In other cases, they have networks that are helpful from a growth perspective. In other cases, they may have stature in the field or the industry in a way that helps to enhance kind of the visibility of the company in the market. So depending on kind of which combination of factors are contributing to interest in a particular independent board member, there may be kind of variables on what the compensation looks like. In certain cases, companies that have multiple independent board members may look to have exactly kind of the same structure and economics across all of them. In other cases, it may be kind of more bespoke based on kind of the seniority and the expertise and kind of stature of the person in question.
And David, I know you have a lot of experience with this. Do you want to weigh in and tell us your thoughts?
Happy to. So I serve on boards both as a function of the venture funds in which I've been involved, but also on technology companies independent of the funds, and then have a perspective that ties back into my public company board service. And on one end of the football field, you're being paid in monopoly money. And on the other end of the football field, you're being paid in US dollars and equity. And there's a really significant aspect of serving on venture-backed company boards for the non-fund managers. So as Julian said, if you're representing your fund, most times you won't be getting compensated. That's part of your role as an investor in the company. But if you're perhaps a member of the audience here thinking about what it would be like to serve on a venture-backed company board, typically as a member of that board, you're going to come on and be awarded some amount of stock in the company. And that varies depending on sector and company, but it's typically fractions of a point up to perhaps a full point, and perhaps more if you're a chair of a board. Depending on the stage that the company's in, you need to think through exactly how you're going to value that equity grant. Because as I mentioned, there is this funnel that all companies are trying to navigate. And the reality is, pick a number, 10% of the companies are going all the way through. So if you're joining a company that's at the earliest of early stages, somebody has a PowerPoint or an idea on a napkin, there's a healthy risk profile associated with that equity grant. And you should take that into consideration, not only that, but also the dilution that your equity grant is going to experience as you capitalize that company, which sometimes can get refreshed, but nonetheless, you have that exposure. Up through, if you're on an IPO facing company board, there's some very, very late stage VC backed companies that are on timelines measured in less than 12 months before they hit the public markets, that are looking to get listing company ready, which means that in addition to all the other things that are required in terms of talent and background to be on a board, there's an increasing amount of pressure to make sure that those boards do reflect diversity. And that creates a nice opportunity for people. And by the time someone is looking at an IPO facing company and perhaps getting invited on the board, that risk profile is not unlike that of a public company towards whatever grant you get actually having a liquidity event and it turning into real money for you. And a good way to think about it is that if you're on a public company board, there's a tiering of things that range from small cap companies to large cap that goes from hundreds of thousands of dollars, plus or minus in either direction, to now you're looking at a VC-backed company, no cash, but a huge multiplier if that company is in fact successful and your equity grant actually turns into an exit and a liquidity event.
David, you touched a little bit on risk. Priti, I'm wondering if you could talk a little bit about the risks of serving on boards. I know I attended the board list and I heard, all of these wonderful things about serving on boards, but then I heard some things that, aren't as exciting, being sued as a company board. And I just wanted to know if you wanted to weigh in a little bit on that and talk a little bit about the risks and how to protect yourselves legally if you are a part of a public board that's been sued.
So I'm not sure, Maria, I'm the best person to answer that question because I haven't served on a public board and might be better suited maybe for David or perhaps even Julian. But the advice that we get internally as our companies are going public is to transition off of those public company boards as quickly as possible leading up to that IPO event, just because the risk profile is indeed quite different. And you're almost always certainly going to get sued at some point in time. But I think I defer to David on this one just because of his domain experience.
Priti, thank you. I'm happy to speak to that. And I know my partners, I believe, are on the call, Sean, Sebastian, and Kalani, Jasmine. We were actually just talking about this relative to, fortunately, a company whose board that I serve that's not in our portfolio. I spent quite a bit of last week with attorneys talking about the possibility of being sued by unhappy investors. And if you're serving on a board, I think someone talked about the dark side. It's not that likely that you're going to get sued, but it is a risk. And typically it happens when there's a big gap between expectations of investors and the performance of the company. Most often, when you take a look at what the threshold is for there to be a legal exposure on that, it's pretty high. Good business judgment is a pretty difficult veil to pierce. You basically have to do something pretty stupid to fall victim to not exercising good business judgment. You have to basically ignore available information or kind of being derelict in your duties. And then there's also the issues around duty of care and duty of loyalty. But again, those are pretty bright lines in the sand that should be pretty easily navigated. That being said, perhaps even more so than the liability is just the time bandit that becomes, because once you get pulled into that, even if you successfully navigate your way out of it, if you get called into a legal proceeding, you cannot, quote unquote, not show up. So all of a sudden, your time becomes the court system's time, and that the opportunity costs associated with that are pretty high. Lastly, D&O insurance is a really important thing. We spent a lot of time calibrating my personal D&O insurance, as well as that provided by the fund that has the role in this particular company, and getting comfortable as to how big, if any, the exposure on top of that D&O insurance was.
Julian, did you have anything to add, or? I
No, I
think we summed it up pretty well. And then we also have Joseph Hurd, who's providing a lot of comments and feedback in the chat, which is really, I think, productive to read. So if you're looking at the chat, really read what Joseph said. He talked about D&O insurance. He talked a little about risk as well.
Yeah, and Joseph, you're spot on that, in addition to the exposure, which is why we step off of public company boards as private company investors, is also that we have a liquidity event and are not subject to any restrictions to trade that stock when the company does go public. So there are financial reasons for us to do so as well, in addition to the exposure. Thank you.
Well, we all know that there's been a lot of publicity around underrepresented minorities and Black people on boards. We know that there's been some steps in the right direction on public boards, but I don't know if we've seen that specifically for VC boards. So what are you panelists doing to try to make sure that you maintain diversity on your portfolio company boards? Mercedes, do you want to start?
Yeah, we've had a couple of events targeted specifically at this issue because it is such a big issue, and I think that the investors and the founders, everyone needs to be thinking about it. We have an event we did earlier this year. We also did it last year that was specifically around getting more Black people onto boards. We invite all the portfolio founders and CEOs and C-suite in our companies. We invite lots of people who are interested in getting onto boards. And also we invite a lot of our co-investors. And it's an event where, typically people hear from people who've been on boards for quite a while. And so there's been a lot of good people getting onto boards coming out of that. The event is called Building Tomorrow's Board Today. My partner, Nicole North at Lightspeed, has led a lot of those efforts. And we have a similar event for the Latinx community coming up later this year. So, these are just small events. It's not necessarily going to change the board makeup overnight, but I think it's important that we start doing whatever we can, writing about it, speaking about it, holding events about it, so we can change the narrative.
Yeah, and at Norwest, we have 3 teams that have been formed by our investors. It's the hiring team, the wiring team, and then there's the helping team as it relates to our portfolio companies. The first 2 are pretty straightforward, hiring for a fund to have more underrepresented investors in our mix. And we're continuing to making a dent there. On the wiring, it's really specifically focused on a third of our companies already have a female founder, which is great, and we're going to keep that number going up. but we're also focused on Black and Latinx founders from a wiring perspective. And the third, when we talk about helping our portfolio companies, it's really doing a couple of things. One is helping them with their own diversity efforts, whether it's the leadership team or the rank and file in terms of building their company. But most importantly, I feel like we have the privilege and the opportunity as board members to have an impact on the future composition of their board as well. And so, I see Chris Snodgrass is here, our head of talent in this event. We are curating a list of folks and building relationships with people specifically from the Black and Latinx community to surface candidates when our companies are looking for independent board members, and be part of the conversation and the process to make sure that we cast the net wide enough to really have an impact from a diversity perspective. And these are all efforts that are going to take time, I think, to really make an impact and a dent in the actual numbers today. But I'm just grateful that we're working on it, and it's just going to take time and a consistent effort to continue to do so.
I'd love to put on two hats here, if I might. The Black Tech Nation Ventures hat, but then also the hat of the African American Directors Forum. And with respect to Black Tech Nation Ventures, we are committed to taking Black and diverse and driving that through our entire business model. So investing in founding teams and executive teams that have significant Black and diverse representation. We're currently tracking towards having half of our LP stack be Black and diverse and the other half be institutional investors. That's a major goal of ours. And then with respect to board representation, very committed to ensuring that our boards are reflecting the overall purpose and profits orientation of Black Tech Nation Ventures. And then switching over to the African American Directors Forum, the reality is when you take a look at the board landscape, public company boards are significantly underrepresented when it comes to African Americans specifically and diverse people in general. And if you go into Latinx, Hispanic, it's almost an order of magnitude below African Americans. So it's a problem that's pervasive with respect to underrepresented minorities. And then if you switch from the public company markets to the VC markets, it gets worse. And a big part of that is that relationships are a key driver to most of board appointments, both in the public company markets and in the VC market. And so public companies have put a lot of process around it. Nonetheless, 75+% of board appointments happen the old-fashioned way. Relationships lead to the names of the people that get put into the process, who are the lead horses to beat towards getting appointed to the boards. Affecting those processes now are some of the outside influences. So the pressure that's being put on both the public and private company markets by institutional investors, folks like the funds here who are proactively looking at how do they change that dynamic. The listing agencies, both NASDAQ and New York Stock Exchange are now providing guidance, and probably will move from guidance to something more specific. And some of the banks, the large institutional investors, JP Morgan, saying that minus diversity on a board, they won't take a company public. So all those things, I think, portend to change and to opportunity for the folks that are on the phone with us.
So we talked about how hard it is to get these positions. Can you tell us some tactics that one might use who does not currently belong to one of those networks to be able to get in front of somebody like a David Motley or Julian Harris to get on a public board?
I'd say spend a lot of time hanging out with Black VC. But quite seriously, there are ponds, places, gathering places that I think people can associate with that will greatly increase the likelihood of their seeing board opportunities. The one thing I also tell people that, and I would love to get the other panelists to weigh in on this one, I'd be curious as to if I'm overstating this, but if you take a look at the number of people who matriculate from college sports to professional sports and get paid for it, it's not dissimilar from the number of people who matriculate onto boards, public or private, and get paid for it. So I think one of the things that people who are aspiring to be on boards is to realize that boards are, quote unquote, not giving away positions. They're not giving away money. They're looking for talent, people that have the talent, the motivation, the work ethic to do all the things required to be on a board. There used to be a phrase, sitting on a board, right? The reality is if you're being paid to be on a board, it's very unlikely that you're sitting on that board. You are working on that board. And if you're not adding value, you probably won't end up staying on that board for too long.
David, the one thing I'll add to that is when I was first entering ventures 3 years ago, someone described to me a donut board meeting. And I was like, what's that? And you're laughing, so you've probably heard the term. And it's like, well, you know, when you go into the board meeting and you eat the donut and that's all you do. And I was shocked at that would be, you know, the mindset of certain folks on the board. And again, going back to, I think, Maria, what you phrase is the good, bad, and ugly. I've been very fortunate that the boards that I'm on have, you know, they're cohesive, they're constructive, but, you know, especially when you have investments that are a few years into the fund or it's aging out of the fund, thinking about the fund life as well, and how leaned in the investor actually is, or the board member actually is, becomes really important to think about and manage transitions as well. Because if they're there for the donut, they're probably not, you know, they're probably occupying a seat that could be better, you know, used by someone else who's actually going to bring their talent to bear, as David described, to help the company.
And another way that you can also get in front of people for our public boards is to find the network nodes, find the executive recruiting partners who also do board placement. Jana Rich is one of the Rich Talent Group. She's mentioned in the article I shared about our Black board service event. And so there are a lot of these folks, and if you can meet them, they oftentimes, if you're an operator and you're doing really well, they'll think about you and consider you both for roles at different companies and for board placement.
Perfect. Now I'm going to skip over to the Q&A. And I'm going to start with Brooke's question. She says, there's no stupid questions here, Brooke. She says, this might be a stupid question. Nonprofit members are expected to financially contribute, whether raising capital or putting in their own money. In startups where the founder or CEO raises capital, what's the expectation of the board for startups of VCs? So basically she's asking, is there an expectation that you'll have to invest your own money in one of these companies?
That's a great question. And the answer, it's actually a very reasonable question, especially coming from the not-for-profit board world. If you're an independent board member, the answer is no. I mean, there's not an obligation that people who are invited to serve as independent board members are required or necessarily even asked. And in some ways, it's the reverse. It's, do you have the opportunity to invest? So if it's a board that you're excited about, excited enough to take a board seat, and to David's point, do the work, you know, I think it's a reasonable question to ask whether you would have an opportunity to invest as the company is doing raises, and that actually can be a part of the compensation effectively, that you have grants that are associated with your seat on the board, but that you also have the right to invest. So a little bit different in the not-for-profit world versus in the investor-backed company world, but I think that's actually a really great question.
Does anyone else want to weigh in on that question? If not, we have another question from Victoria. So she said we talked a little bit about the D&O insurance and the legal risk, and she's asking us to clarify if the D&O prevents any risk from, or does D&O also apply to private boards as well as public boards?
Absolutely. And D&O protects you, one, up to a certain limit, but there are also, as with almost any insurance policy of any type, there are outs for the insurance company. So it doesn't protect you from criminal acts. It doesn't protect you from basically malice aforethought, but it does protect you from you're trying to do the right thing, and somehow there's some letter of the law, if you will, some legal technicality that allows people to attribute some liability and exposure to you that will be covered by the D&O. But I would also say that it takes a pretty specific kind of opening for people to be able to find you liable as a as a board member. It can be a troublesome process if a lawsuit is brought, but the likelihood of you're actually having a financial exposure is relatively low. And I would love to have, I see on the chat line, there's several attorneys here that are probably saying, David, don't say that. In the sense that I'm probably not giving it the right phraseology. And I would welcome someone in the chat perhaps to tighten up what I just said.
Well, I think Dominic wanted to weigh. He said the point on D&O is important to check to make sure you have on your nonprofit boards. Also, all boards should have protection. So very important to make sure you're protected, no matter what board you're on. There's also a really interesting question I saw that came through by Edward. So when you're a part of a VC fund, you invest in a company, everyone's excited. How do you decide who gets on the board? Mercedes.
For us, a lot of the initial part is around who initially built the relationship from the VC firm in terms of who gets on the board. But at the same time, I mean, we as a venture firm say it's more important that we are investors in the company at all rather than who is the specific board member. So, in situations where it does happen sometimes where the person that brings in the company is not necessarily the person the founder wants on the board, and we have low ego, we say, hey, who do you want on the board? You choose anybody at the firm. And I would say otherwise, I mean, it's a bigger question around in terms of how do you really, is that at the early stages with early startup founders, how do you, money is a commodity. So how do you sell yourself and how do you really make founders understand that you're going to be with them in the trenches, that you're going to fight for them? I think founders really, really appreciate people who show a high level of empathy of what it's like to run a company. And so, that's one of the things you always want to have in mind of why should they pick you?
I'd add a couple things to that. So typically, it is the person who builds the relationship that joins the board, at least at Norwest. And the reason we approach it that way is, again, most of us are former operators, and there are certain things that we have skill sets in. So, for example, my sort of superpower, as I alluded to earlier, is helping companies scale post some product market fit. And so that needs to align with the stage the company's at and what the founder is looking for at that point in time with that raise. And that's what makes it a good fit, right? It's the firm and then it's the partner. And I think as a founder, it's really important to ask the question, which unfortunately a lot of founders don't ask, which is, how does your firm set up? How is your partnership set up? And what are the financial incentives? So for example, at Norwest, we have 21 partners, which is a large firm. And we all share in the same financial carrier incentives, which means that for a company that I invest in, my partners are also vested in, for us and that investment to be successful. So for example, one of my partners' companies was going to acquire a company, had never done that before. And they're like, hey, I know someone who's run corp dev, let me put you in touch. And so I ended up spending time with this founder to helping them think through the acquisition process, integration, and so on and so forth. And so it's really understanding also what the partnership brings to the table and how they're structured. So please, if you're a founder raising capital, ask that question of the potential investors you're speaking with as well, in addition to building the relationship and rapport with the board member who will be joining you, because in many ways, this is like a marriage. And not a shotgun wedding, hopefully, where you have an opportunity to develop a relationship and get to know each other and your strengths and that chemistry as you enter into that important relationship. And I've one final point on chemistry. I think having the new investors speak with their existing board members as they're leading up to that fundraising event is also important to make sure that you have that chemistry, not just with the founder, but with the group at large.
Maria, can I ask a favor?
Yeah.
I think Jason's question around board observers is.
I was just about to add to put that one.
Good.
Jason, great questions as always. Love this question. I think this is a really important question and we're going to answer it right now. Can you speak briefly about best practices for board observer roles, ways to leverage information rights and voting rights when voting rights are not present? And this is a big deal when you're a VC. You might not get an actual board seat. You may get a board observer seat. And so what is the delineation between that?
So I think this is a really important question. In practice, boards don't vote that often, right? There's sort of the perfunctory things, approving minutes, et cetera, but most of the board meetings that I have, there is not a board vote on something that is, incredibly substantive, right? There are board discussions that are robust, but the number of times that boards are voting on a big decision is relatively limited. And so, in practice, there are some boards where I have a board seat, there's some boards where I'm an observer. I don't really think about the way that I engage in a board meeting any differently between when I'm a board member or board observer. I think the CEOs and probably the other board members that I serve with would say that I am, at least in the meeting, equally sort of value added, whether I have a board seat or I'm an observer. But part of the reason why I was excited by this question is I think one of the things we actually can do, in addition to thinking about how to expand the number of folks who have board seats, as we think about having greater diversity in the boardroom, is actually thinking creatively around board observer seats. And it's a great way to learn. So it may be that someone who might not have all of the requisite kind of experience or expertise for a board seat might be someone that you might consider for a board observer seat as a way for them to learn. And it's, we've had some conversations in some of the kind of circles that I travel in around. Are there ways to think about leveraging board observer seats to give people that first in to help not only sort of deepen their expertise and their readiness to have a board seat with, one of our portfolio companies or on some of the other kind of company boards that my partners and I serve on, but also so that they can put it on their resume for that next one. We so often hear, well, I did the not-for-profit boards and I got that board experience, then I'm trying to kind of make this transition to the for-profit sector. But I think these board observer seats could be a really interesting tool to help accelerate diversity in the boardroom.
I also think that there's an interesting role for advisory roles as well. So in addition to board observers, I found that if you're trying to get connected into the corporate governance of the company and influence and impact, getting on an advisory board for a private company is also an interesting way to go about it. And again, quick note on compensation, since that's come up, it's not too dissimilar to an independent advisor, independent board member role, in that you typically get some equity for being an advisor as well. It'll be a much smaller, of course, than a board member, but it's a pretty straightforward and well-known way to structure your involvement. And as an advisor, you may actually want to put some caps or commitments around your time. So maybe you would be an advisor for up to 20 hours a week, give or take, or these are the specific areas that you would focus on. You might even go as far as doing a statement of work to say, these are the things I will advise on over a period of time. So I just wanted to bring that up as another option to get involved with a company as well.
So we have another question in the chat that I think is really interesting. I want to summarize this quickly as we're running out of time. But when we talk about how to figure out the right fit for the board seat from your perspective funds, how do you manage capacity? So people might all want Mercedes on their cap table to be a part of their board, but they can't all have Mercedes because she has a limited amount of time. So how do you manage your time and how do you prioritize which boards you decide to sit on?
Great question. I mean, at the VC-backed companies, we're investors. And so there's a certain number of deals we're going to do per year. I won't, suddenly do 10 deals one year and only do one the next year. Generally, my cadence is going to be doing about 2 to 4 deals per year. And I'd say, if you think about board service can be 7 years, 10 years, you can quickly realize that adds up to a lot of board seats. And so we think about also potentially there's a difference between seed stage boards versus later stage boards, and how, you know, there's a mix that you can manage. And, you know, most firms will say that they may only have, yeah, you know, our average partner has 10 board seats, but think about the people who have been there for maybe 10 years. They probably have a lot more than 10, but they're maybe not telling you about all of them. And so there's also this period of, you know, a board seats where things have gone for 5, 7, 10 years, that they start to become less active, and they might transfer it to another teammate who is earlier in their career and is getting board experience. So that can be, of course, a different, you know, relationship for the founder. But I'd say generally, you know, I hear typically VC backed, I hear people saying they try not to be on more than, you know, 10 active boards at one time, but keyword being active.
Well, thank you to all of the panelists. It's been wonderful. David, Mercedes, Priti, Julian, you've shared some very valuable experience, anecdotes, and I'm sure the attendees are very thankful for your time.
Thank you.
Maria.
Pleasure.
Thanks for having us.
And thank you, Maria, for moderating. I learned a lot. I was taking notes throughout. So thank you all for joining us today. And really excited to continue moving this conversation. So we're actually joined by Marlon Nichols, who is a founding partner of Mac Ventures. And he will be introduced by Sydney Sykes, our very own co-founder of Black VC. So we'll be making that transition shortly.
Lovely. Thank you so much, Samer. I'll take it over from here. Priti and David, if you go off camera, that'd be great. Marlon, so great to see you. We have known each other for a while through Black VC, and before Black VC existed, through being Black investors in the ecosystem. But it's great to finally do a chat with you. Mute.
Yeah, every time.
Every time.
No, I was saying thanks for having me. It's great to be here with you, and congratulations to you on your shifts and things that you got going on. So, yeah.
Thank you. You know how it is. You got to keep moving forward. Well, maybe just to give a little bit of background, you've been in venture for a long time through Intel Capital, and then from founding CrossCulture, now Mac. But maybe you could just give a little overview of how you got started in venture, why you ended up deciding to start Mac, and how you think about being a board being a board member.
Yeah. So, 3 long questions. I'll try to keep them short though. So how I got to venture, I started my career as an operator. I was an employee number 10 at a seed stage startup that I helped grow into the UK and Europe before we sold it to SAP. And then I did a stint, more like 5 years, in management and strategy consulting, first post M&A integration work, and then pure play strategy for media and entertainment companies. And during that process, both of those careers, I learned that I didn't want to do either, but something in the middle felt like, you know, the perfect fit. And so for me, that was venture. So I went back to business school at Cornell. Had the privilege of leading the school's pre-seed fund as its CEO for 1.5 years of the 2 that I was there. And then graduated with an MBA and joined Intel Capital, where I spent 5 years. Became a Kaufman Fellow, and just decided at some point that I could do a lot more by building my own fund, investing in the founders that that I really respected, admired, and wanted to work with. And so the first fund was called CrossCulture Ventures, which I co-founded with Troy Carter. That fund is now a month over six years old, and we've invested in 42 companies. We've seen a few of them exit successfully, a couple tank, and when we were towards the end of our investment period, we were thinking about, well, what's best for for this vision that we had of creating an elite seed stage venture fund that invests without bias and invests under this thesis that we call cultural investing, which is essentially watching for emerging behavioral trends and big shifts in culture. And that meant growing a team of very capable folks that had complementary skill sets and networks. And so for me, I made the decision that that group was another venture fund called M Ventures, which was led by Adrian Fenty, Michael Palank, and Charles King. And so we decided to merge our teams and build MAC. And so MAC is a $110 million seed stage vehicle, headquartered in LA, with a presence in the Bay Area as well. So far, we are 32 companies into the portfolio. We already have a couple of unicorns in the portfolio after just a year and a half. Yeah, and it's just looking to continue to build on that vision. And then the last question was, how do I think about boards, right? Yeah, so I think it's an extension of the investment, right? So I go into every investment thinking about it as a partnership with that entrepreneur and that founding team. And so the board is basically the same thing. How do I partner with these entrepreneurs on a more intimate level than all of the other investors or most other investors? And how can are there ways that I can uniquely contribute to the continued growth and success of that company?
Right. So diving into that last bit, it sounds like you have a good idea of what kind of investor, or sorry, what kind of board member you want to be. Was that a concrete decision you made thinking about, I want to be X type of board member, or was it something that sort of came natural to you as, like you said, an extension of your investing?
Yeah, I think it's twofold. I think it's something I learned. So at Intel Capital, I had terrific mentors like Lisa Lambert, and others, Dharmesh Thakur, who's now at Battery. And this was kind of, their approach, right, to it. But also, the career that I had before venture was in services. And, services you are serving, you are doing for others. And that's kind of, part of the ethos of the firm that we've built. My partners also come from services industry, whether that means running the city of Washington, D.C., right, or coming from the talent management business, et cetera. So it's just a part of our DNA, our ethos, if you would. But I also, got to see it up close firsthand from the people that I learned the business of venture from.
Did being an operator also play a role in that? Because you hear a lot from entrepreneurs about the type of board members they want or what they're experiencing. I'm curious how that, being so close to entrepreneurs and being so early at a startup, affected you being a board member later on.
Yeah, not really, right? Because at employee number 10 doesn't really interact with the board that much, honestly. It's more so the the CEO and the founders. So I didn't really have, as an operator, I didn't have a lot of exposure to the investors in the company. Like the memories I have was periodically walking by the big conference room and seeing all these new faces in there that I'd never seen before, and it looking really important. That was the extent of it. So no, I think it's just what I've learned, and then having served on a number of boards and learning as I go. I think that continue to inform the perspective and help me to kind of be the type of investor that I want to be.
Right. Of course, I think experience is the best teacher. Getting that hands-on experience is kind of the only way you're going to learn to be a board member. Do you think of course you've learned, what do you think has changed about you from maybe 5 years ago or when you were early in your career as a board member versus now?
I think with most of us, while we're trying to cut our teeth, it's important to us to prove that we're super smart and we know a lot, and and maybe we're the smartest in the room. And I think early on that was my approach. And found out pretty quickly, well, no, you're never going to be the smartest person in the room when you're dealing with an entity that you're not sitting in every day, right? There's no way I know more about this company than the CEO that's living and breathing it. So I think the biggest shift in my behavior is I listen more than anything else, and I ask questions for two reasons. One, so that I can gain a proper understanding of the full picture, and then two, so that whoever I'm working with can kind of hear what they're saying and what they're thinking out loud. Just sometimes saying it out loud gives you a different viewpoint.
Yeah, totally. I think being a bouncing board. There was an investor I used to work with at NEA who used to say the best role a VC can take on is being there as a therapist for the founder. And I'm sure that's just as true in a board meeting, just asking you, why did you do that? What do you think we should do next? Rather than I think you should do this next and this is how you should feel.
Yeah. Or how I tend to stay away from the whys, because a why can become personal, and these decisions for the most part should be objective. So I ask kind of what, how, where types of questions.
Yeah. I think that term getting personal is really important, because of course there can be some tension. I think we heard Mercedes talk about it on the earlier board call of you are not this person's boss. But at the same time, you're there to be an advisor. You're controlling some of the dollars that might go into the company. How do you think about balancing being that supportive person, being that network that's there for them, as well as thinking about it as an investment and being there as a fiduciary advocate for your LPs? Yeah.
So when you join a board, you're wearing as an investor, you're wearing two hats, right? So as a director of that board, you have a fiduciary responsibility to that company. Full stop. As an investor, you have a fiduciary responsibility to your fund and your investors. And hopefully, most of the time, those responsibilities are aligned. There can become times where they're not aligned. And so the right thing to do there is to vote with the company, as what's best for the company as a board member, and then in a shareholder vote there by what's best for your fund and your investors. But that isn't exactly the question that you were asking me. But I think that's important to note. And where that typically shows up, is around acquisition conversations, equity investment conversations, etc. But yeah, I think you have to. Yeah, you gotta do what's best for the company. And if taking a hard stance, that's an unpopular stance or decision, then that's what you have to do, right? And hopefully, that leadership team will understand and respect that. Understand that, one, that's why they asked you to be on the board. So that you're not just saying yes to everything, but you're actually taking into account what's best for the company. And then I forgot what the second thing I was going to say, or the reason why it's important. But I think the first one is the primary and the most important.
Yeah.
Also, no, if you build a great relationship, with the CEO and the rest of the board, then that should be okay. If things should not be coming down to a final vote in most cases on a board, right? There should be a lot of conversation that happens, that occurred before that decision, right? And everyone should know where everyone else sits, and we actually should be making decisions together. But we don't live in a perfect world, so sometimes it deviates from that. And hopefully, you've built a strong enough relationship where you can survive those unfortunate events.
Yeah, I think it is important to stress that. Sometimes I feel like in maybe pop culture or media, especially in the past, you hear about venture capitalists and private equity, especially as people who come in and say, this is what you should do, and entrepreneurs feeling like they have their back against the wall. But the truth is, 9 times out of 10, if not more, you're both going towards the same goal. And I think that's exactly what you're talking about.
Yeah.
So another kind of philosophical question for you: when you're on the board with someone else, other investors, are there certain types of board members? Are there certain traits you really admire, or even certain investors you really admire as board members?
Yeah, I respect and appreciate experience. So I'm on a board with both Jeff Jordan and Josh Koppelman. Two very successful investors that have been a part of, from Jeff's perspective, actually building, great successful companies and investing and supporting them. And Josh has supported and invested in a ton of them. So, just having, getting their perspective, right, on different topics, and hearing stories of how this company or that company handled a similar situation is super helpful for me as I continue to learn and build my career, because still got a long way to go. So I love being on boards with folks that are way more experienced than I am. So that's one trait. And the other is, I try to be come into the office every day with a very open mind, not thinking that I know everything. And so, I really respect people that take a similar approach, right? You do have all this experience, but someone else might have a unique perspective, and I really respect people that are willing to listen to those perspectives and actually crave them. So
yeah, totally. Transitioning more a little bit to what's going on in the ecosystem right now, we've heard a lot of conversations about board composition, especially about diversifying boards. I'm curious, one, to just get your take on this, but maybe to take a step back, how do you think about board design, advising your startups about independent board members and that situation?
Mm-hmm. So we start investing at sometimes pre-seed, and usually there isn't a board then, but we typically get rights to a board when it's formed. Most boards start at the seed stage, and the ideal board composition is one common, one investor, whoever most likely the largest or most value-add investor from that series, and an independent, which is someone that's not an employee, that's not an investor, but can add, whatever value is needed to the company at that stage. What we often find ourselves doing, though, is deviating from that a little bit. So there isn't an independent, but there are two common seats. So it might be the CEO and another founder, or a CEO and someone that the CEO appoints. And we do that because oftentimes at the seed stage, this is their first company. And, everyone hears all the horror stories about being fired from their company and doing all this stuff, which, that's a headache in the best case, right? It's not something that investors actually want to do. When it happens, it's something that has to be done. But nonetheless, it's a concern. And so the way that you mitigate that concern is by making sure that the founder maintains control of the board. And so then we have two common and one seed stage investor. And that can work really well too. The other thing that I'll see is like advisory committees or boards formed, where these are more industry experts or super connectors or whatever, and you're trading some level of equity for their services for like a couple of years, right? And usually that's the agreement. Is very specific about what they're going to deliver over that period of time, and their shares will vest equally over that period of time. And then when we move to Series A, the Series A lead is going to want to have a board seat. So then the board usually moves to a 5-person board, where you are adding that Series A investor and an independent to keep the board uneven.
So if you're joining a board for the first time, or you're joining as an advisor, like you're saying, so you're sort of board adjacent, how do you think about adding value or being in that sort of ramp up or not traditional board member seat?
Oh, sorry. So as an advisor, how do you?
Yeah, if you're advising either, say, a board observer or an advisor who is, having their first time sitting in on a board. Yeah.
So the advisors typically aren't in the board meetings. That's like a separate track. But for observers, and I observe on a few boards as well. You should treat it like you are a board member, right? The only difference is that around governance matters and anything really, you don't have a vote on that board, right? But you do have a voice, and how if you're good at building relationships and growing rapport, then that voice can be quite influential. So the recommendation is to treat it like you are a board member, right? You're getting the same board packet, the same information. You have the same level of access to the management team, all of it. So just function as though you are, you're a voting board member. You are a board member, you just don't have a vote.
So trying really to add as much value as you would, and knowing that you're kind of there to give that opinion and add value, even if you're not designated as a board member.
Yeah, because yeah, everyone in the room is there for a reason, right? So you need to provide the value that you're there to that you're expected to provide. Otherwise, you shouldn't be in the room.
All right, of course, show why you're in the room. So given the premise of this conversation and Black VC, and a lot of the conversations that are going on now about diversity, how are you having these conversations with either founders or other venture firms that are thinking about diversifying boards?
Mm-hmm. We're pretty adamant. So we've done a lot of kind of research on teams and boards, and there's a lot that has been written on the fact that what your first 10 employees look like will determine what the rest of your company ultimately looks like. And so we've made it part of our mission to ensure that if we're investing in non-diverse founders, white guys, that one, they appreciate and respect the benefits of having a diverse team, right? And not for optics, but for what it means to the performance and ultimate value of the company. So we that's something that we're screening for going in, right? If you are anti having a diverse team, we're not investing in your company. So from the gate, we're aligned that this is important. And then, from there, at the seed stage, you're somewhat limited in terms of making sure that you have a diverse board, right? Because again, it's going to be the founders and the lead investor from the seed stage. So that kind of is what it is, right? But then once you move to the next stage of the company, and you're adding an independent, right, or you're vetting Series A investors, like that should be something that that founding team is thinking about as well. And so we try to remind them of that. Like, are you talking to any women VCs? Are you talking to any other Black-led venture firms? Right? If why not? Right? And for that independent seat, let's make sure we run a process that has a nice balance of people of color and women, right? And let's make sure we're picking from we're picking from the best of the best, right, all around. And we introduce candidates. Like I'm on the board of a company called PureStream right now, and PureStream is they're operating in kind of the equities market. And so our co-investors are Goldman Sachs, Morgan Stanley, Bank of America, Soros, Alliance Bernstein, right? So you could imagine that every single person around the table is a man. and so we have 2 board seats that we need to fill. And so I had a conversation with the founder who's also Latino. And it was great because I didn't have to lead the conversation and saying these 2 board seats need to go to women. He did that, right? Which speaks to the fact that we did a great job vetting this founder and entrepreneur and making sure that our values are aligned. So.
Yeah, and I think that relates to a question we just got in the chat, because part of in that situation, you have a founder who really gets it and who really understands, but that's not always the case, especially not with other investors. And so Jacqueline was asking in the chat, how are you able to assess that representation matters? I'm sure some people will say whatever is needed to raise capital.
It's one of those things. It's like when you're building a team, for the first time, and you're interviewing folks, you ask questions, and you can get bullshitted and stuff like, sorry, it's being recorded. You can get BS and you may fall for it, but after a while, experience kind of kicks in, and when you're being BS. So there are ways to ask the question, and actually actions speak louder than words, right? So who else is on that founding team? What do your prospective candidates look like? What are your networks, right? Like these are all like things and questions that you can ask to really get to the heart of this. So yeah, and there are little tricks that you can use to tease it out. And the way someone answers the question, you can see if they're really bought in, or they're saying what needs to be said to get to the next thing.
Right. It's all a game of figuring out what the end goal is, what the founder's like, and how you can best work with them.
Mm-hmm.
Marlon, this has been such a great chat. I really appreciate you giving us some advice. I'm sure this will be really helpful for everyone out there trying to figure out how to be a helpful board member or get onto their first board seat. I'll hand it over now to Samer and let him wrap up the conversation today. But thank you so much for joining us.
Thanks, Sydney. Great to see you.
You too.
Thank you, Marlon, Sydney. I appreciate you all sharing just the plethora of experience that you have as it relates to board and just investing in general. So thank you and the other speakers as well. Just quickly wrapping up, obviously today is the anniversary of George Floyd's murder. And, I know many of us have been reflecting on what that's meant, the impact of it, how much has changed and how much has stayed the same over the past year. And just wanted to take the time to, acknowledge and honor his memory and reflect on how that event has impacted a lot of people on this community, a lot of people on this call, a lot of people across the globe. And so part of that, for those of you that participated in last year's We Won't Wait event with Black VC, we'll be hosting a follow-up called Be the Change on June 4th from 2:30 to 4 p.m. Eastern, convening a few leaders across venture and tech to just really discuss, what has actually happened. There was a lot of commitments, there was a lot of promises over the past year. What has really transpired? And what else do we have to do, and how can we, within the community, continue to lead the change to really build a more equitable ecosystem? Additionally, I think, this conversation around just being a better board member is obviously pertinent to a lot of people in the community. So we'll be having a follow-up discussion as well on just key strategies for increasing board diversity as well. So that event you'll be hearing more about, we'll be also doing it in partnership with Gunderson, Dettmer, and Valence. And that'll be on Thursday, June 10th. And again, just thank you everybody for joining us. Thank you everybody for your questions. Appreciate you taking the time to really engage with us, especially today, as I'm sure there's a lot of other things on your mind. And with that, we'll wrap up, and I hope everybody else has a great day.